Een hele goede middag.
Hi everyone.
Bonjour à tous.
Hi, it's a pleasure to be here.
De coronapandemie heeft de werkelijkheid van ons allemaal sterk veranderd.
A major impact on our personal lives, on our professional lives, on the economy.
COVID-19.
The COVID-19.
Corona.
COVID-19
has taught the entire world the power of exponentials.
The crisis in 2008 was mainly a blowout for the financial industry, where the current pandemic is actually affecting all industries.
What will happen to fiscal policy?
We haven't met, so hello.
Bonjour.
Bonjour. Good morning, Marco.
Good morning, bonjour.
In the long term, there's a lot of questions that are now following this amazing crisis that we're going through.
Ik vind dat dus inderdaad een gamechanger. We gaan nu het herstel in de komende periode.
Nee, ik denk niet dat we teruggaan naar normaal. Ik hoop ook niet dat we teruggaan naar normaal, maar dat we hier de mooie dingen van kunnen meenemen.
Een van de leukste dingen van de afgelopen weken vond ik dat wij inderdaad onze gereedschapkist hebben veranderd. Om een beeld te krijgen van hoe gaat die economie eigenlijk zich gedragen.
Dass die Thesen, die ich seit so 4 Monaten verbreitet habe, ich habe ja vor 4 Monaten einen Text im Internet veröffentlicht, die Zukunft nach Corona, wo ich versucht habe, die andere Seite der Krise zu beschreiben. Die Wahrnehmungen verschieben sich und das ist etwas, was bleibt.
Grazie a Valentin von Nieuwenhuizen.
Thank you very much.
Want to know more what we are talking about? Do join the NNIP Responsible Investing Summer Course. It starts on the 29th of July. Join and we will see you there.
Good afternoon, good morning, or even good evening for some of you. Welcome and thank you for joining already the 5th session of the Responsible Investing Summer Course, an initiative held in collaboration with leading academics from universities around the globe. My name is Jeroen Bos and I'm Head of Specialized Equity and Responsible Investing at NN Investment Partners. For those of you joining us for the first time, the Summer Course is a series of virtual interactive lectures on responsible investing, consumer behavior and sustainable finance, running until the end of September. You can join us either live or review a recording of these sessions at your own convenience. The aim of this course is to educate investors on the impact of COVID-19 on governments, corporates and individual behavior, and to what extent the changes we have witnessed are here to stay. Additionally, it explores the impact on responsible investing and sustainable finance and how these fields will likely evolve. CFA Society VBA Netherlands, the Society for Investment Professionals, has awarded 1 continuing education credit per lecture, which can be recorded on the CFA Institute website. Let's first briefly touch upon some of housekeeping items. The floor is open for questions and please use the chat function to ask your questions. Feel free to send in your questions at any time and we will gather them up as we go along. Look out for the pinned messages on top of the chat for any announcements from our crew, and if you're experiencing any technical issues, please send us a message in the chat by using @NNIP. The team here will try to respond as quickly as possible. Okay, so with that out of the way, let's get going. Today we have the pleasure of having Cary Krosinsky with us. Cary is one of the global thought leaders when it comes to sustainable investing and has written several books on the topic in the last decade. He is also the co-founder of the Carbon Tracker Initiative and a member of the New York State Common Decarbonization Advisory Panel. Cary is also a leading educator and advisor and teaches popular classes at both Yale and Brown University on sustainable finance and related topics. Cary's latest book and research focuses on modern China and what is really happening on the ground in China when it comes to the transition to a more sustainable society. How China is stimulating the transition to a more sustainable society is also the topic of today's lecture, so I'm really looking forward to this. During his lecture, Cary will examine how China has become a global leader in the development of green finance and how this is opening up opportunities for investors. So with that, let me welcome Cary, who joins us today live from the US. Cary, good to see you and thank you for joining us. How are you today?
Fantastic. Thank you so much for having me. Great to be with you.
Great. Well, we're really looking forward to your insights, Cary. So great to have you. Good to know for the audience is that we pre-recorded your lecture to ensure we don't have any technical glitches. After the lecture, Cary and I will be back for a live Q&A discussing all your questions. So let's kick off with Cary's keynote lecture. Enjoy, everyone.
Hi, everyone. Let's have a talk today about a really important subject, China and sustainable transitions. It's important to start, I think, with the fact that as we speak, Asia is half of the world's economy by some measures. This is extremely important because for those of us who are desperate to solve climate change, we absolutely have to consider the entire world, and not just the West. China uses half of the world's coal. The ASEAN region will be a major economic force in the decades to come. Countries like Indonesia will have a particular challenge to transition away from higher carbon economic sectors. We can't solve climate change without Asia making its own successful and radical transition. Most importantly, economic vibrancy is a requirement for these low carbon transitions to occur. Yet we make China a pariah, isolate China, challenge its economy. This potentially slows down how China can transform itself and the region. So let's get into the details. It's important to note, for those of us who've been tracking energy demand over time, as we have at Yale and the Energy Studies program I'm part of, that it's long been anticipated that Asia would become an increasing percentage of energy demand in the world. And as you can see on the chart, by 2040, something like 40% of global energy demand will come from Asia, if not more when you consider the rest of the developing world. And so how China, India, and other countries transition is extremely important for us actually to be able to make these transitions happen successfully. So we really have to focus in on what we need to do as a starting point. This is why we recently issued what's now my 7th book, Modern China, Financial Cooperation for Solving Sustainability Challenges. China faces significant ESG challenges, but the government knows it needs to fix these challenges in order to deliver a result to its people. This is an extremely important modern positive dynamic that has resulted, and as a result, China is on the hook to produce a result, so it should be encouraged to do so. We also try to clarify for the Western audience less familiar with China's 5,000-year history of chaos, Western abuse in the 1800s, long dynasties and invasions that have led China and its ethos of trying to protect itself, being an important part of the country and how it operates to this day in some ways. We also talk about China's speed and the re-rise of Chinese innovation more recently. And perhaps most excitingly, China has become a leader on green finance and green finance policy. China is about the most creative when it comes to green finance policy, rapidly innovating across asset class, trying to do more and more. The recent rise of sustainable strategies in China is being also seen through public equity solutions. China is actually moving to mandatory ESG disclosure of public companies, something you don't see anywhere else. This is expected by the end of this year. And also a lot is happening in China when it comes to private equity, venture capital, and green bonds. And contrast that to the present day US approach, and you see that China is actually trying much harder than the current government is here, certainly. We're really honored in our book to have an introduction from the head of green finance in China, Dr. Ma Jun, who's been at the People's Bank of China and Tsinghua University, and he makes 5 points in his introduction, which is how China got to where it is today, a position of global leadership when it comes to green finance. First, he built a political consensus. Second, he took a top-down approach, not a market-led approach, and so this got buy-in over a relatively short period of time, a few years ago. And also the importance of coordination, getting ministries involved. So it's important to note that while China might seem monolithic, it actually has a lot of regional differences, a lot of ministries that make their own decisions in some ways. And so coordination, in general, a very important aspect to the success of China when it comes to becoming a leader on the subject. Dr. Ma Jun also talks about the importance of green finance committees at the national and local level, and also how he's encouraged and others regional finance, including the concept of sub-regional green bonds. So a real honor to have an introduction from the country's leader on the subject. China is actually fighting 3 tough battles. One is poverty alleviation. The government has and maintains a goal of absolutely eradicating poverty by 2020. That's this year, of course, and they haven't seemed to move from that goal. There are actually quite a few goals that the country has. These require high levels of investment. And another major battle it's fighting is pollution. The country has all sorts of targets when it comes to reinvigorating its land, making its water clean, and also they're very mindful of the financial system risks that they face in China. So a lot going on in the country, a lot of efforts to try to improve and solve for these problems. That takes us to innovation in China. So it's not always well understood that China actually has a history of innovation and is a leader in this regard today, actually. So a brief history. China's history of innovation goes way back. There's something called the 4 Great Inventions. And this goes back to when China was the world's largest economy centuries ago. China actually invented gunpowder, paper, the printing press, and the compass. So China actually has a history of innovation that's important to keep in mind. In the past few centuries, this had totally subsided. The country went into periods of chaos and all sorts of turmoil. But in recent years, in the last few decades, China has risen back up and has made themselves a leader in this regard, transitioning from being just a manufacturer of brands to what is today a series of very powerful companies and ecosystems and all sorts of innovation happening across all sorts of sectors. Recent trends show that China is on the rise in this regard. The Global Innovation Index shows China moving from 43rd to 14th over the last 10 years alone. China has leaders in technology. Companies like Alibaba and Tencent have become global leaders, unicorns, as it were. Other indications of innovation, China has surpassed the US in building supercomputers and has a 10x increase in the number of patents that have been issued. Innovation is actually a key national strategy in China. The Made in China 2025 initiative, which some have pushed back on, has actually helped China advance local innovation, and it's enabled their role as a global manufacturing superpower and revitalize their prowess in this regard, back from when the country was the world's largest economy some centuries ago. Their regulatory environment is very conducive to startups and innovation. There are dozens of initiatives worth $100 billion in tax cuts. There's all sorts of financial incentives that have been placed throughout the Chinese economy to try to encourage this sort of thing and to encourage green finance as well. Discounting tax rates, providing free land in some cases, and a 20% threshold to funds for encouraging and incubating technology entrepreneurs. We're seeing this in green finance as well, as we'll see in a minute. Different cities have also risen up as innovation hubs across China. An example being Beijing. Beijing now is ranked the 4th most innovative city in the world, ahead of London, New York, and Hong Kong. It's the 3rd largest destination in the world for VC funding, It has the most unicorns outside of Silicon Valley. There are areas of Beijing with investor offices. It's the home of Tencent. And there's a 200-meter strip with 36 million of government funding. That's the home to 300 startups. So China's really focused on developing its ability to innovate. China also has the largest talent pool in the world when it comes to STEM graduates in the world by some measure, as you can see on this chart. Chinese innovation also is taking a very strong hold in the context of sustainability. We're seeing technological innovation on clean energy, clean transportation, certainly, AI and assisting on this sort of thing. So a lot of super technical innovation happening in China when it comes to transportation in particular. Economic and financial model innovation is occurring. There's a low carbon economic model where you're seeing these incentives being put in place, basically giving banks an incentive to issue more green bonds. Also, pollution pricing mechanisms have been very successful in encouraging power plants to transition away from coal. Social innovations have been also moving forward from a standpoint of sustainable agriculture, job creation through innovation, and also educational innovations have been occurring using technology. And there are an enormous number of opportunities and risks for global investors as a result. So the opportunities are pretty clear. A huge market, 772 million internet users compared to 292 million in the US. So that's not quite a factor of 3, but quite significant. The combination of innovation and China speed, which is the amazing entrepreneurship and spirit of the Chinese economy, plus its market potential, just makes it almost unavoidable opportunity for investors to consider. It's why we don't see any financial services firms slowing down in moving into China to take advantage of what's happening there, regardless of the situation with the relationship between the nations. There's an opportunity also to influence the Belt and Road Initiative. China has been learning from its initial mistakes. China learns very quickly. And when it makes a mistake, it absolutely learns from that. And so increasingly, you're seeing China talk about their importance of greening the Belt and Road Initiative. And this is super important because in a few decades, we will have replaced all of the world's infrastructure pretty much. So how green that is extremely important. There are potential traps to keep in mind for investors. Certainly IP protection is growing, but we're still not completely safe from copying a long history of that in China. And of course, there's also policy risk. So if the country does change its mind on policy, that's a risk for investors to keep in mind. Chinese innovation is dependent on foreign suppliers. We're seeing that with Huawei, that increasingly is being isolated. And also, if you are going to operate in China, you very much need local people to help watch your investments, to understand the country and its nuances, and its unique nature of doing business and building relationships. And this is partly why we hosted an event in Shenzhen last January. Back in September 2017, we had a very successful event at Yale talking about how, in some ways, we've had the ESG conversation backwards. It's not so much build an ESG database and then figure out what to do with it. Rather, we seek outcomes. Outcomes are driven by case studies of success, including on the investment side. And how do we scale the successful case studies of how we can invest and make a difference? So we had a two-day event in Shenzhen looking at case studies of what's working in China. And we actually went around the country and had a chance to experience the horrible quality of the air in person, which I'm really glad we did. You literally taste the air when you're in China. And it makes clear why the country is trying so hard to transition and why its people basically will demand results in the years to come, which is a good thing. Even the president is paying attention there. He works from Beijing where the air can be terrible. So it's his hope that every day there'll be blue skies, green mountains, and clear rivers, not just in Beijing, but across China. So this is very much part of China and what it's trying to achieve in the years to come. China also has issues with water stress. So this has largely been anticipated to be a problem before climate change effects take place. So check out the work of China Water Risk, who we had at our event in Shenzhen. These are a few slides from their presentation. It's extremely important. They're expanding to India, another country with water stress issues. You can see where the coal mines are. Coal is extremely water intensive, so there's a definite nexus to pay attention to. And this is indeed a problem across Asia, where people are isolated and operate economically in river basins. And with the Himalaya mountains melting, the glaciers will make it harder for people to actually have fresh water. A lot of really big issues across Asia in this regard. So the case studies that I mentioned that we featured at our event include quite a few private equity stories. Also, we had my good friend Charles Yance, who used to be with a firm called CLSA, now with Macquarie. At any rate, check out his last, I think it was his last report, Hard Decisions. It talks about the importance of governance in Asia. Regardless of the Department of Labor in the US, it's just impossible to see how corporate governance isn't critically important when it comes to investing. In half of the world, Asia, Luckin Coffee, a recent example of a company who simply was not governed properly. And if you're doing your homework, you could catch such things. It's just extremely important for successful investing. NN Investment Partners, to its great credit, has been working with China AMC and bringing Western style engagement to China. So exciting to see. And we have a case study on that in our book. And there are a few billion-dollar funds in China that look at sustainability, but not many. And this is a big question to us. How do we actually bring sustainable investing to China? And how important would that be for changing the dynamic? We also had at our event the US-China Green Fund, which since then has cut a deal with Apple, part of Apple's sustainability commitments, working with its suppliers and the US-China Green Fund. We also had a few impact investors, Ehang Capital, who's been in China for quite a long time, and TPG, whose Rise Fund is a fascinating case study of how do you measure impact in an investment portfolio. More recently, and things really do move fast in China, what's been happening? China is extending and expanding its new energy vehicle incentives, extending them to 2022. China is looking to target 20% of new car sales by 2025. Currently, that number is 5%. China had previously created a green license program where it's actually competitive to be able to get a license to own a car. And if you buy a green car, not only are you more likely to get the license, you can also drive it more frequently. You can't drive your cars in the polluted cities of China every day. So China's been very creative when it comes to trying to push hydrogen, creating an environment for companies like Tesla and BMW to operate. And China is the world's largest auto market right now. So you can see how China's been moving really hard, making its buses electric in cities like Shenzhen. And then you have the circular economy. So China has been moving rapidly, much more so than any country in the world, to implement mandatory recycling. That happened in Shanghai in July. There was a lot of pushback and confusion, but now it's working. And they're putting that into place in Beijing and across the country. This will have a significant impact on things like landfill, resource reutilization, just super important steps that China's taking that you don't often hear about. But China also has been moving really rapidly into its planning when it comes to sustainability. So China's taken to the Sustainable Development Goals and China's attempts to map the UN 2030 agenda to its actual national implementation plan with 50 national planning documents with very detailed and specific focus areas for every goal. China's now moving this fall to create a 15-year plan, which of course China has a history of 5-year plans. Now they're moving to a 15-year plan. And I'm sure we'll see a lot of sustainability issues brought into its planning for the future. China also has been talking about greening its stimulus. So I don't think it's going to have to do this because the country is largely recovered from the pandemic. But China was talking about making 20% of its stimulus green. And so this is another case of how China is increasingly bringing sustainability directly into everything it does as a government, encouraging less stimulus to traditional infrastructure, more stimulus for new infrastructure projects such as cloud computing other forms of technology, and also reducing and even stopping funding for coal energy. President Xi recently traveled to a coal province and said they weren't transitioning fast enough. So a lot of important signals coming from China. China's also been changing its green bond definitions, trying to bring them more in line with the European taxonomies that have been emerging. China's also been developing national green development funds, looking to make Shanghai another green finance center, in addition to the work that's been happening in Beijing and in the greater Bay Area that includes Hong Kong. So quite a bit happening just about at every level across China. And the situation is constantly changing. You have to stay up on it to see what's happening. And it's not widely reported in the West for whatever reason. China is also experiencing a lot of direct challenges from climate change. There's been quite a bit of flooding after a very hot period of time. So the Chinese people completely buy into the fact that climate change is an imperative for the country to deal with. They're experiencing it all the time. Some may not know, 3 days ago, masks are no longer required in Beijing. I'm very jealous of that here in the United States, where we don't know what to trust still. But because China's gotten themselves on top of the pandemic, they're back to normal in Beijing. And also more recently, so for those who've been to China and have had a dinner with some baijiu, President Xi pushed back on that. He said, well, you're ordering too much food. You should be ordering less food because a lot of it goes to waste. So now the country has a mandate to be more efficient on food. So at every cultural level of China, the way China does business, things are changing quite rapidly. More recent trends include the fact that China has the largest high-speed rail network. For those of you who've taken the high-speed rail train from Beijing to Shanghai, it moves really quick. It's very efficient. From a renewable energy and technology standpoint, back in 2018, Bloomberg New Energy Finance found that 4 of the 5 largest VC deals were in China. Successful e-commerce at scale is happening, and e-payments. And of course, you've seen on-demand bicycles. Shouldn't there be billions of dollars of sustainable funds invested in China and across Asia today, I have to ask, with all of this in mind? I just don't understand why we're not putting as much attention to China and Asia when it comes to sustainability, when it's so important to the success of the global transition. China's becoming a consumer-driven economy. You can see that total retail sales in China crossed the US and is now larger and is expected to continue to grow and become the largest component in the world of the global economy. China's moving from being an industrial power to being a service and consumption economy. Why would you not want to participate in that as an investor? China sometimes gets things wrong. There was a lot of excitement about Mobike and other shared bicycle companies. A lot of them failed, and now you have these mountains of bikes pictures that are quite easily found on the internet. Point being that these things happen, but China learns, and actually the shared bike systems are coming back now. We get stuck on moments and pictures, and we get disappointed and shocked. But it's important to kind of step back and understand that from all of these challenges, and certainly we don't always get it right here in the West, China learns quickly, is trying, experimenting, and ultimately will probably get it right if we give them a chance. In the first 7 months of this year, 2 major China ETFs were wildly outperforming the S&P 500. If you subtract out a few of the large technology companies here in the US, I'm sure that would be even more significant outperformance. Similar significant outperformance has been seen over the last 3 months and year to date. So it's just really important to sort of be honest about where we're going, what's happening, and what is likely to happen in the future, which is the most important thing. And this is a really important slide, I think, a perspective that, who's dealing with reality? You can see around the world, 71% of people agree that in the long term, climate change is as serious a crisis as COVID-19. And in China, that percentage is the highest of all. The Chinese people are experiencing climate change effects. They can see it's very important, and that means they'll want to do something about it. Countries like Mexico might be an underrated story there as well. And the Indian transition will certainly happen. They may not be quite as ready, but they're going to move fast too. And all the way at the bottom, you can see countries like the US and Australia, to some degree Canada, the UK and Russia, operating in more of a state of denial about what the climate science is telling us. And it'll be interesting to see how economies shift based on the perceptions of reality and the policy that results from countries that don't deal with reality. The future of Chinese companies is a very important thing to also keep in mind. Companies like NIO have been extremely successful in recent times. Chinese companies are continuing to look to list IPOs in the US because they need to tap into Western markets. Tencent, very much a successful company. Spin-offs are being listed to this day in the US. And with mandatory ESG reporting coming in China, there's every chance that China could be a leader globally when it comes to public equity portfolios. So pushing back on that, isolating China, that just does damage not only to our ability to respond to climate change, but also the value of our portfolios potentially. There are ongoing issues. There always are issues. There's issues of national competitiveness, as we're talking about now. Can we solve climate change in isolation? And is this isolation maybe intentional in some ways is a question I think we have to ask ourselves. Of course, there are controversial issues, but can we create safe spaces and have respect for each other? And the from respect and from relationships can come constructive dialogues where we can solve these issues of concern together. That's what I think has the best chance of success. So if we're concerned about some of what China does, can we at least make an attempt to negotiate and collaborate and see if we can actually have a better result rather than isolate and frankly be racist about it? I'm not sure that's going to get us the results that we seek. We were very fortunate at Yale to have Secretary Cary in our class last year. He was adamant that right now, as the person who built the US-China relationship leading into the Paris Agreement, that right now we could invest alongside China in dozens of countries across the developing world to radically increase their uptake of renewable energy. He was extremely disappointed with the current approach of the administration. And this is also reflective of the views of many bipartisan leaders, people like Ray Dalio and Hank Paulson, who've been spending decades in China, and Steve Schwarzman of Blackstone and others. There's a great body of literature and leadership that's just waiting to try to encourage a better relationship, which is the only way I think we'll solve our societal challenges together. The conclusions of our book are that you need to build what's called guanxi for success in China. The Chinese sociology is really interesting. There's a great book called From the Soil, which talks about how China's sociology has developed from agrarian roots and people needing to build circles of trust. And this is how Chinese relationships are built and business is done to this day. So you have to build your own guanxi for success in China. We also talk about how we don't believe China is any longer an emerging market. In fact, the entire frame for what's a developed country and a developing country, we think is stale, outdated, and needs to change. We suggest that countries are in fact either mature, evolving, or challenged. And somewhere on a sliding scale, every country is either moving up or down as a much better way to determine whether a country is quote unquote emerging or developing. We also have a 10-step framework for investors in the book as part of the conclusions. To wrap up, envisioning outcomes, the most important thing I think that we need to do is to stop and envision what will global success look like when it comes to issues like climate change and human rights. How do we achieve the goals that we seek? Shouldn't we be working backwards from what success looks like as opposed to just kind of pointing fingers and let's start from a position of respect and at least have an understanding of what's happening. Will Asia actually be a more significant financial opportunity for investors in the decade to come? Or will we get more growth out of Europe and the US? And if so, why? At least we think China deserves deeper study, more thinking, and I think an imperative for a better relationship to at least give that a try. So thank you so much.
Thank you, Cary. That was great. Really great to see how China is progressing in this area and the impressive innovation momentum that's clearly there. I already see a lot of questions coming in, so I would suggest to dive right in to those together, Cary. As a reminder for the audience, if you have a question, you can post your question through the chat function. So let's kick off with the first question, Cary. So we see a lot of momentum when it comes to innovation. If you look at the Western world, Western governments, Western companies, what can they learn or maybe copy from China today in terms of what China is developing in terms of innovation and the momentum we're seeing there?
Interesting question. One of the troubling things that's happening is that over the past year, even since our event in Shenzhen that I mentioned, that China is increasingly being isolated economically to some degree. So they've been looking around for friends. They looked to Canada. They were a bit puzzled by what the Canadian approach to the relationship. Obviously, the U.S., they're kind of waiting for the election. And, even the EU at times hasn't been open. So the Chinese companies are, I think, a bit concerned about how global their financial opportunities might be. So, in many ways, the Chinese companies are looking across Asia, building as many relationships as they can, leveraging the Belt and Road Initiative country relationships. So, so there's that to keep in mind. I mean, any company is a global organization. So, companies outside of China will need to think about that. How do you globalize your opportunities? And I think that's the one thing that perhaps we can learn from this period of time, which is that if you're a company and if you're an investor in a company, you really want the revenue to be global and diversified. And pushing back on that isn't helping. And so, if you're a company, you want to encourage the ability to have a globally diverse revenue base. And so you should be, frankly, lobbying for that with your governments.
Clear, thanks, Cary. Another interesting question that came in. Given that China is also exercising quite a large influence on the companies, on the countries around China via its economic might and foreign policy, how is their green policy incorporated in their foreign policy?
Yeah, exactly. For me, this is maybe the largest opportunity of all. So when we look again at the global energy demand footprint, we see Asia just being an outsized percentage and only increasing percentage. And so as China gets the imperative that we're in to solve climate change and pollution, the more we can see China wanting to bring those learnings that they've experienced and the benefits they've experienced to other countries, to outsource to the poorer countries in the region and help them transform using technology, using the tools that they're developing and using themselves. So for me, that's the big opportunity here, and the hidden story in some ways of the reason we should want to encourage the Chinese transition, benefit as investors accordingly, and then that technology can be more readily brought to the rest of Asia. The West is not in as good a position to help the rest of Asia. And so for me, when you look at an actual transition country by country, an important part of that component almost has to be China learning about how to deal with other nations in a better way, which it's been doing. We have a chapter on that in our book, actually. And encourage that through respect and dialogue. Always get it right, but it has every chance to get it right. And it's, I think, our responsibility to help that.
Clear. Maybe question on from Tim Chen. If you look at the China A shares, they have a large retail investor base compared with the US. Do you think that is a problem for pushing positive ESG changes in Chinese companies, and more from the engagement angle, given that a larger part is retail versus institutional investors?
That's a really important question, actually. we've been looking at this for some time. In our first class, the first time I taught sustainable finance in 2009 at Columbia University, we had an expert, Ray Chung, actually, who contributed to our first book. We brought him in to talk about the opportunities that investors might have back then. It's important to note that from a liquidity standpoint, the majority of the transactions are day trading in salons. And the Chinese government's well aware of this. It's a big problem, actually. And so, again, another reason why it would be really important to see more Western investors come in to the market is that it would bring more long-term stability of ownership. That would give companies more space to operate in confidence. As things stand, with all of the day trading that goes on, it's more of a game, and it is a definite problem. So this is another opportunity for the West to come in and try to modernize the market so that there isn't this day trading phenomenon that's as prevalent. Obviously, here in the West, we also have day trading. You know, we have the rise of Robinhood as a platform that some are increasingly concerned about, where you know, the average person can just transact, and people are wondering to what degree is that starting to happen here as well in the U.S. So you know, it's fine to have day trading, but like, what's the right percentage, and how can we increase the long-term owners of companies that you know, would benefit the companies, would benefit the long-term planning that those companies can do. It's a really important dynamic to shift.
Yeah, thanks. And then we have a question from Laura Kesterton. What is your view on data sharing with Chinese government using the Chinese tech giants for national surveillance, maybe even suppression of their people? Is this something that Western investors simply need to accept as a cultural practice in China, as part of basically a license to do business there? And maybe taking that question a little bit broader, should we view governance and ESG in China through a slightly different lens than when we assess Western companies? Or should we do that in the same manner? What's your view on that topic?
I love that question. You know, here in the U.S., we have a company called Facebook, and you know, Facebook gathers data. You know, there are interesting ways that gets manipulated. You know, in some ways, privacy is dead as we speak. I think maybe it's slightly different in the EU, where you still have some vestiges of attempts to try to protect privacy, especially in the Netherlands. There's a long history of that, of course. So you know, we're in sort of opposite extremes in that regard. But here in the U.S., there's no privacy. You know, there are databases on everyone. The NSA is certainly monitoring things, and you know, in the UK they have to, because of the history with the IRA. And so you know, China gets a lot of criticism for this. I can understand that. You know, they have a database on everyone. The police can wear a helmet and see who's walking by and see if there's a troublemaker in the area. You know, we can do that here too. There's a database of the people with bad credit in China. How many people are on that database? 50 million people. Yeah, I think some of the concern is slightly overdone because of the fact that technology is making these things possible everywhere. Do we trust Facebook? Is the question I keep coming back to. But it is an important question, and there are obviously opportunities to abuse that we should be very concerned about. And in some ways, it's an opportunity for the EU actually to step up and try to extend the work that it's been doing elsewhere. So maybe that's an opportunity for the EU to take some leadership globally and try to help other regions adapt some of the policies that are in place there. As far as the last question, understanding governance in China, there's a phrase, you know, Chinese characteristics, that always needs to be applied to just about everything. You know, what China will actually require its public companies to report when it goes to mandatory ESG will be very interesting. No one seems to know quite yet what that will be. there's every expectation that there'll be a period of time for the companies to start to understand what this even means. I think very few companies in China necessarily understand ESG, which is why the work of NN Investment Partners to encourage Western-style investment is so important, because these things need to become cultural. Understanding governance in China is very important. It's really about building relationships ultimately, and understanding that the government is a strategic owner, but to what degree with every company. And then, the boards are not transparent in China, for example. So there's a lot of work to be done in this regard, and that will only benefit the country and investors who step into China to not do so in a blind manner. So it is a very important question, and one that will continue to evolve.
Clear, maybe in that respect, if you look at engagement and engaging with the companies in China, how is that progressing? How open are Chinese companies, in your view, versus maybe companies in the US or Europe to engage with investors?
Yeah, really, it's a really important question. And just to first further mention, corporate governance is something that differs around the world. So I think we need to sort of start with that. There's sort of a US model of governance, and if you try to apply that to, say, Germany, it doesn't really work, because in Germany, people are sitting on each other's boards. Hasn't been an obstacle to the rise of the economic success of the nation. So we have to kind of look country by country at what's working, what's reality. As far as the state of engagement in China, I think, again, the most important thing to keep in mind is that basically what you have is the government. The government acts almost like a large private equity firm, and is a significant owner of every company, or is obviously a significant factor as to how every company will operate, whether they're state-owned or partly state-owned, or even fully public. The government's a major presence. And so the important thing to understand is, you're basically looking at the ownership of a company when you're looking at governance and when you're engaging with the company, wherever the company is. In China, the government's the most important owner. And so institutional investors have less power to engage successfully. And so it is early days. But having said that, things are starting to change on a company by company basis, and opportunities are rapidly rising. And so you are starting to see some of the more sophisticated companies doing more, but it is very early days. So the good news is that the country is very focused on its transition, and so you won't be met with total resistance. In fact, if it's clear that you're hoping to bring capital to China, foreign capital is not only welcome but critical, and a critical positive dynamic for us, because if you're going to bring flows of capital over time to China, you can do so with caveats, and then you can insist on minimum standards when it comes to, say, supply chain practices and policies, and that's where we can make a real difference. So engagement retains enormous potential in a country like China, where when you look at the larger firms that have been doing shareholder engagement globally, I think they're first just stepping their toes into the water in some ways. So that's why it's so great that you guys have been involved in that directly on the ground.
Okay, good. Maybe moving a little bit to the environmental side. A couple of questions coming in on that angle. Maybe firstly, if you look at the coal-fired power capacity, that is still growing in China on an absolute basis. What is the outlook there post-COVID-19, and are there policies in place that move China away from a coal-supported economy? Do you see it still growing on an absolute basis in the next decade, and only from a relative perspective become smaller, or do you expect a complete transition away from coal?
Yeah, that's a super important question. It's going to be hard. It's going to be a hard transition, but it's one that China wants to make. A large percentage of the reason why the air is terrible in major cities in China is that they're using coal, and they know that. And if you're in China, you have something on your phone called the Blue app, and you can see the PM 2.5, and everyone knows it comes from coal burning. So there's a great opportunity to help China make that transition. They've developed leading policies to allow that to happen. Those pollution pricing mechanisms I mentioned, you don't see that implemented much anywhere else. So China can also take a leadership position on policies that enable the transition that could be brought to other countries as well. I'll go back to the start of my lecture. It is absolutely impossible for a country to make a low carbon transition unless it's economically vibrant. If you're a country that's struggling economically, you simply can't afford to make the investments necessary to allow for that transition to occur. And so this isolation and vilification of China, for me, is really, really important to just kind of sit back and think about what effect that might have on China's ability to make this transformation that they themselves know they need to make. The more we push back on China and hurt their economy, the less likely they are to transform. The more we show respect, build a relationship, and try to bring China into a global conversation on what they might do and what we might do in the West, then China's more likely to act. Obviously, for the U.S. to drop out of the Paris Accord is not a great signal in that regard either. So we have to bring China into the global conversation, recognize that we have to do our part. And so, ultimately, China will do more the more it's respected and the more that it's given that opportunity. And the more we isolate China, the less likely they are to make that transition.
Clear. A question on more the political structure of China from Scott Pretry. Is it fair to say that the long-term nature of a one-party state has been really beneficial for China to see improvements on issues like climate change and poverty elevation? So does the increasing level of party paranoia, as he calls it, on its own stability highlights some potential bumps in the road ahead and increasingly also potential for falsifying maybe the outward message on true progress? So how do you see that stability of progress within China, given the political climate?
It's really super interesting. I mean, certainly China was not designed with the climate crisis in mind, obviously, but here we are. When you actually visit China and you see the country, you think about the vast nature of the country. You try to picture an alternate system that could work there, and I don't know what that is. What would Chinese democracy look like? Is that the right system for China? I don't presume to know, but certainly it is starting to work. The average Chinese citizen is not unhappy. Is not desperately unhappy at this point. They look around the world and they see chaos, and they see political turmoil, and they see much less successful responses to the pandemic. And so in some ways, certainly China's style of government has given them an advantage. So long as the leadership is focused on sustainability issues. The danger, of course, if you have one party and they don't focus on the right issues, then you have a much more dangerous, less optimal situation. But as things stand, China is very focused on solving its problems. Interesting surveys taken recently. Many people are saying in some ways China is more democratic than the U.S., which is quite fascinating to hear. I don't want to suggest what I think the best form of government is. These things actually shift. There's a great book called Dark Continent by Princeton professor Mark Mazower. It's a really fascinating book. It talks about, in the last century, it was not always presumed that free market capitalism and democracy was the best system. And so I think we have to have at least somewhat of an open mind as to what works best. One other thing to mention is systems thinking. Systems thinking is a super important aspect when it comes to understanding how we can solve our sustainability challenges. And when you think about systems thinking, it informs on what actually works, and it's just a really interesting way to try to come up with the best system. Learning from what's working, learning from what's not working, being open-minded, because actually no paradigms are true in the end. So what we actually ideally need is a process, and one where we can constantly learn what will actually bring about success, and be open to new ideas. When it comes to fisheries depleting, for example, from a systems thinking perspective, when all of the stakeholders recognize that we're depleting an ocean of fish, the only way to solve that is to shut down the fishery for a period of time, basically putting in place a Chinese-style government for a period of time to allow for that fishery to replenish. This is how systems can repair themselves. And in an odd way, we're seeing that here in 2020 with the pandemic. We've shut a lot of things down, and carbon emissions are lower, but that's not obviously the long-term answer. But can we learn from these things? And can we have a bit more of an open mind about what we think will work going forward?
Great. Maybe we have time for one or two more questions before the time is up. A question from Nathan. Apart from the ESG mandatory disclosures for publicly listed companies, and also the redefinition of the green bond criteria, what are other examples of major regulatory measures that will really stimulate sustainable finance, from which maybe in the West we can also learn?
Yeah, I'll come back to the pollution pricing mechanisms. In our classes at Brown, we had a student from China whose family made boilers, and the boilers were no longer permitted based on changes to regulation, and their company went out of business. China can be quite brutal about the transition. I think there are something like 1 million unemployed coal workers, for example. China is prepared to take the necessary steps, pretty willing to put on blinders and just get on with it. And with any transition, there are going to be winners and losers. But can we be a bit more mindful about helping with the transition for those who will be negatively affected? I think China can be anticipated to do what's necessary from a regulatory standpoint. They've been very creative. They've been coming out with these bank incentives, as I mentioned. They're basically going to insist that 20% of business in China is green. You don't see that anywhere else. So I think you can expect China to push the needle when it comes to regulation on just about anything. You just won't see that here in the United States as we speak anyway.
Great. With that, I'm afraid time is up. Really enjoyed today's session, and I'm very confident the audience did as well. So thank you very much, Cary, for your time today.
Thank you for having me.
From my side, I would like to thank you all for joining us again today. We hope to see you again for the next lecture that is scheduled for next week on the 3rd of September. Nicolas Motti of the École Polytechnique will then speak about corporate social responsibility and responsible investing, and how this convergence is accelerating. So hope to see you all there. For now, wishing you all a good afternoon and a good evening. Thank you.